What is the BRRR method? The infamous, the world famous BRRR method. Everybody talks about it. It's a catchphrase. It's a buzzword. Everybody thinks you should be doing it. Everybody recommends doing it. What the hell is this thing that we call BRRR? Well, that's what we're going to talk about in this video. I'm going to give you my thoughts on BRRR, how to get started, where to apply it, when it's good, all of those kind of things. Make sure to watch this entire video to the end because there's going to be a number of good points that you're going to want to understand. So first, let's start. What is the BRRR method? It's basically an acronym, B and 4 R's. BRRRR. So it's buy, renovate, rent, refinance, and repeat. Let's go into this a little bit. So obviously what the idea here is that you're gonna hold a property long term. So you're gonna buy a property that needs fixing up, that's kind of under market value. You're gonna renovate it. That's the first step. So you're gonna build instant equity here. Now, if you structured the deal right, you could sell it right here, make a chunk of cash, and move on. That's called rehabbing. And that's actually what I recommend when you're first starting out. I'll talk about that in just a sec. The next R is rent. So once you've fixed up the property, it's really looking nice, you should be able to rent it very quickly and you should be able to get the higher end of the market rent because it's essentially a brand new property. Now you've got cash flow coming in and you have to make sure that your cash flow is positive and you want to look at your cash on cash return. How much cash did you put in this property and what are you going to get back every month on that cash? These are very important metrics to look at before you even consider buying the property. So you're going to want to say, look, I'm going to buy this property, I'm going to renovate it, I'm going to put this amount of cash into it, and when it's all said and done, I'm going to be able to make this much cash flow based on the cash that you put in initially. Don't base it on the refi, base it on the initial cash. If the deal makes sense, then move forward and do the deal. If it doesn't, I wouldn't do that deal and I would move on. Now the third R is refinance. The idea with BRRR is you can pull all of your money out. So if you put $50,000 into this property to buy it and renovate it, when you refinance it, the idea at least is you can pull all the $50,000 out. Now you have a cash flowing property where you've got no money in and you can just keep doing this. The reality is that it doesn't work that way all the time. It absolutely does not work that way. You're not going to always be able to refinance and pull all of your money out. You might be able to pull some of it out. You might be able to pull none of it out. It really depends on the numbers, the bank you're working with, and the lending environment at that time. Years ago, they were much more loose and you could pull all kinds of money out. You could pull 125% of the money out. But now they just don't let you do that because of all the issues we've had and all the crisis we've had in the banking industry over the years. So really look at this carefully. This is the problem people run into. They only have a certain amount of cash. They think, oh, I'm just going to keep doing this forever, build up 100 rental properties, but they get stuck after their first 1 or 2 because they run out of cash. So this is exactly why I don't recommend doing BRRR when you're starting out. It's a good long-term wealth building strategy, but when you're starting, you need to get your capital base and you need to quickly, that's what I said, quickly build your capital base. So now you got a big pile of cash and you can take parts of it and put it into a BRRR strategy. Now the last R is simple, repeat. So what we're gonna do is we're gonna buy, we're gonna renovate, we're gonna rent, we're gonna refinance, and we're gonna repeat. We're just gonna keep doing that over and over. In an ideal world, we can do this unlimited times. But in the reality is that you're gonna probably have to leave some capital in every time and eventually you're gonna run out of capital. What I recommend is if you don't have a capital base at all, check out my other YouTube video where I tell you how to start in real estate with little or no money, build your capital base, and then once you have $50,000 or more, then start investing in rehabs. The advantage with rehabs is you can do 100% return on your capital. You can find deals where you put in $50,000 and you make a $50,000 profit when it's all said and done. That's basically doubling your capital base every 3 to 6 months every time you do rehab. So you can go from 50,000 to 100,000 to 200,000, 400,000, et cetera, et cetera. And once you built your capital base to a nice size, then you can take small chunks of it and go into the BRRR strategy, park it in a BRRR property and let it work for you for the long term while you're over here doing more and more rehabs. To me, that's the ideal strategy. That's what we talk about in my program where we offer multiple courses. One is a wholesaling course, which allows you to start your capital base if you have nothing to start with. Then we talk about rehabbing to build your capital base. And then what we can do is potentially help you with the BRRR strategy if you want to do that. That's not what we really talk about in the course, but that's a long-term game that you can get into once you've done all the steps that we talk about in my program. So again, I would highly recommend that you learn more about this. Step 1, educate yourself. Step 2, start taking some action. And then step 3, evaluate your results and see if it makes sense. And for sure, look at some paid education, either mine or somebody else, because that's really what's going to get you to the next level, not just trying to learn all of this from YouTube and doing it yourself. So again, the BRRR strategy absolutely works, but it's a long-term way to build wealth. Starting out, you need to get a capital base if you don't have one, then you need to grow that capital base very quickly, then potentially consider a BRRR strategy. If you found this video helpful, make sure to like, subscribe to my channel, and turn on your notifications so you don't miss any of the important videos in this frequently asked questions series that we put out on a regular basis.